We are now approaching almost 18,000 active listings here on the MLS in Vancouver. Numbers that we haven't seen in well over a decade. And even though affordability has dropped 20% since its peak at the end of 2023, pricing has not crashed out like so many people thought it would. But it's starting to build up a rare setup for buyers, especially those thinking in the detached realm. Construction of detached single-family homes is dropping 19%. And we know that inventory continues to climb up and pricing is flat and gearing downwards. We're going to start with Vancouver home sales here. And you can see the note here is recent momentum, but don't get it twisted. There's been a little bit of growth here, but we are still heavily in the dog days here in Vancouver. So Vancouver home sales saw a notable 7.6% month over month increase in June, though they remain 9.8% lower than the same period last year. This represents the second lowest June sales volume since 2000, indicating persistent market challenges despite the recent uptick. Sales weakness is most pronounced in the condo segment, which continues to underperform to other housing types. So the chart referencing about the momentum here, and I put momentum in quotations, is that you can see that there's a little bit of an uptick here with the last sales data. But when you look at where we are at, we're at very, very low levels. And that's what's contributing to the tough market conditions, especially for sellers right now. And even though we've had a 7.6% uptick here, and you can see it with the graph here, we're still well below where we need to be to see any momentum and a change in market conditions. When we see the monthly change in home sales, you can see that on this graph on the top right, with the baseline at 0%, you can see that we are still in a world of hurt. We have had this nice uptick here that we just pronounced, but we have had more cases of declines in month over month changes in home sales, and we're needing to see some more of these numbers flip from the bottom to the top to see some of those changes. The year over year changes in sales in Vancouver, again, the condo market dropping more than 16%, and I mean that's no surprise to anyone. The condo market is so tough in and around Vancouver, the downtown market. Investors are gone. They don't cash flow. They're a liability. People don't want to be landlords. So you have so much condo product on the open market right now. I have a couple condos that are priced extremely well, and I can't even get showings, let alone people writing lowball offers. We can't even get people into these units. So if you're a first-time home buyer, especially, you have a lot of selection right now. There's a lot of people that are hurting, that are needing to make a deal. So I really recommend you starting to kick it into high gear, at least getting a pre-approval to see what you can afford, because you can see here with the condo market especially, massive amount of opportunity for anyone who's looking to get into the market in terms of a first-time home buyer. You know, maybe if you have a lot of cash, you know, there can be some opportunities for landlords as well. Rentals are down, but if you are sitting on some money, there will be opportunity to help with those margins with cash flow as well. When we're referencing the second very low June sales, you can see here at the end, this is the 2025 June sales here. Other than in 2020, was a little bit lower. You know, this is really bad. In 25 years, we're at the third lowest data point in terms of June sales. So it's been very, very difficult. When we go to inventory, and again, this is a marker for buyers, not a great marker for sellers, but supply outpacing demand. So we have 3 points here that I want to go over. With new listing spikes, new listings jumped 9% month over month, 10.3% year over year, and are running approximately 16% above decade norms. The condo segment drove this surge, with listings reaching record highs in June, which we just went over with that previous graph. Number two, inventory buildup. Active inventory increased by 23.8% year over year, reaching new record highs across all segments. The single family segment experienced the most pronounced inventory buildup, which is quite interesting. There's not a lot of selection. As you may know, if you live in Vancouver, Burnaby, detached homes are getting ripped down at such a high clip, making way for multiplexes, making way for purpose-built rentals. So it's interesting to see that a lot of these detached market, or a lot of these detached units have come to market, which is, you know, starting to set up this great opportunity for any detached buyer. Number three, market balance indicators. The sales to new listings ratio declined to 34%, a level only previously seen in 2009 and 2019. Total total months of inventory reached 8.0 in June, the highest reading for this month since 2012. So you can see just from these 3 bullet points here, we're seeing records that we don't necessarily want to see if you're a seller. These are all things that should be music to your ears as a buyer. And I detailed it in previous videos because of the fact that we have record number of mortgage renewals here in 2025 and even more in 2026. We have about a year and a half of pressure points for a lot of homeowners that aren't going to be able to renew their mortgages at these higher clips. And that's why we're starting to see such, well, I shouldn't say starting to see, that's why we've seen such great value buys. I closed on 2 properties this past last week. One was a detached home. The property was on market since 2023, originally listed at 5.5 million. We ended up getting it for 3.8. I had a Vancouver penthouse, or one of the last penthouse sales was in that 1.7 as a recent sale. We got it for 1.35. There are people that need to make a deal, and if you're a buyer, if you're just waiting there on the sidelines without knowing your numbers, you're going to be losing out on some of these opportunities. As we break down those last 3 bullet points, I want to jump into the charts here so you can see exactly what I'm referencing. So in terms of single family home sales in Vancouver, 2025 is this black line here, and you can see that we are at essentially the 3rd lowest a marker in terms of the last 10 years in single family home sales. We have a point here in 2020, which is this gray line, and then 2022, which we're on par with. In terms of condo sales, again, we had 2019, which was a little bit lower, and then 2020. So those COVID years. But other than that, in terms of single family home sales and condo sales, you can see on the graph here with these black lines on the bottom, they are at the bottom in terms of the last decade. Year over year changes in new listings in Vancouver, and this is which was very interesting with these single family listings. Is it a combination of some of these land assemblies or people wanting to take advantage of the land use changes? Possibly. I think it could be also those who can't afford their payments could be another reasoning why we've seen this huge shoot up with single family detached selection. Condos, a little around 7% increase. And then when we look at June condo new listings coming to market in 2025, this is the highest marker that we've seen in 2 decades. So again, if you are wanting to get into the condo market, this is music to your ears. This is something that you need to be keen in on for sure. If you're a seller, this is not great. Condos especially is very hard. You have to be sharp with your pricing, and if you have a ton of equity, but usually what I've been finding, anyone who's bought since 2019, 2020, you're putting yourself in a pretty compromising position if you're looking to sell, especially when you reduce for a disappointing number likely for your sale of your home, and then realtor fees. But if you are working in a multiple property designation in terms of selling your condo, getting into a detached market, for example, you will be able to get that back on the buy. But if you are just operating in a single property environment, I think you need to wait unless you absolutely have to sell. I had a consultation with a client. She was thinking of getting rid of her rental property. She lives abroad, and my advice was for her was to wait unless you are re-entering back into the market to try to offset some of those costs. Unless you have a massive equity position, you're definitely not going to get true value for your condo right now. When we go to active MLS listings, and we mentioned this right off the top, we can see that we're continuing to climb and almost touching this 18,000 marker, numbers that we haven't even seen anything close in the last 10 years. In 2019, we were around that 15,000 marker. We're about 3,000 more active listings right now than the next highest in the past decade. So again, music to your ears if you are a buyer. And when we see year over year changes in active listings in Vancouver, across both segments, well over 20%. Which is just insane, and it's just painting this picture of this prolonged tough market that I think is still going to be here to stay for the next 12 to 18, maybe 24 months. When we get to single family and condo inventory, you can see here that the single family inventory is just taken off really since February. I'm not sure why exactly that is, but now we're cresting over 10,000. So a lot of selection in terms of for buyers. So, if you're not picky about a certain area, this is a time for you to be able able to get into a specific area or type of home that you otherwise wouldn't be able to afford. These are some very important charts for you if you are considering the detached market. In terms of condo inventory, we started to stall out here a little bit, but again, record number of inventory. The next highest was 10 years ago in 2015. We were around that 6,300 mark. We're well over 1,000 units higher than we were 10 years ago. So when we talk about months of inventory, what does that exactly mean? At the current clip of 8 months of inventory currently on market, it would take 8 months at the current pace of sales to clean up all the inventory that we have. So that is a very long time. Usually around that 4 to 6 months is where we want to operate in. So again, the highest number of months of inventory since 2012, so 13 years. Heavy buyer market conditions, and you can see exactly why, and that's why I bring the data onto the charts to show you exactly what's going on. There are a lot of buyers out there that are wanting to wait. I have no idea why. At some point, one person can be at the bottom of the market where before things start to go up. I'm not saying things are going to start to go up now, but it's really hard to plan things right around the bottom. But if you can essentially get near the bottom, you are going to be able to get some good purchasing power out there right now, and have had a great success rate doing that so far this year for clients of mine. As we get into pricing trends, which is really important for all of you out there, and it states stability amidst pressure. So the current MLS house price index remained largely unchanged in June. I'm going to bring these charts up a little bit bigger so you can see it better at home, but it flatlined here. Overall decline of approximately 7%. From early 2022 peaks, and current sales to listings ratio suggests further price declines are likely, and that goes to the whole 8 months of supply, a ton of choices in terms of inventory. If we have so much inventory out there, buyers are going to have a lot of selection, and continued downward pressure on pricing will happen. The relative price stability despite inventory growth indicates market resistance to sharp corrections, though downward pressure continues. And we're going to go into some of these affordability charts, affordability is starting to drop 20% since its peak. That's why we haven't seen this huge crash in pricing, because as some of this decline in pricing has started, and you can see in this chart here, because we've had some relief in mortgage rates, it hasn't just been a falling out of the bottom here. So with this Vancouver MLS HPI on the left here, you can see that with this recent data, it was essentially flatline. But I do think over the next year to year and a half to 2 years, we're going to see some gradual drops in pricing. Nothing crazy until we run into our supply problem in the next couple years. When we look at monthly change in Vancouver MLS HPI, you can see that we've had, other than this little bump up here in June, we had about 5 consecutive months of a price drop here. So I do think we're starting to get close to that bottom in terms of pricing. I very near it anyways, and some of this data is reflecting that, but there's still going to be a lot of inventory, and it's going to take a lot of change for this market to correct itself. With affordability, I have a note here, improving but still challenging. So monthly payment relief, the typical mortgage payment needed for a Vancouver home is decreased by almost 20% from peak levels. Affordability metrics have returned to early 2022 levels, a period that saw considerably stronger sales activity. And then pre-pandemic comparison, despite improvements, payments remain significantly higher than pre-2021 levels, continuing to strain buyers. The improving affordability trend creates potential for increased buyer activity even within the current challenging economic environment. So this is the chart I wanted to show you, which really puts it in perspective how crazy real estate here is in Vancouver. You can see the peak that we're speaking about here in that 2023 realm, where it was getting around $5,600, a month on average for a monthly mortgage payment on a typical home. We've dropped now under that $4,500, which is still, a very strong high number, especially when you compare it to the national average, which is around $2,600 a month. So we're around $1,800, $1,900 a month more than the national average. And it just really speaks to, how difficult it is for people to get into the market and to sustain that. And you can see even with this run up compared to the national average, we were suffering big time, especially for those variable rate holders here in Vancouver. These are some important stats here in terms of the construction pipeline and the shifting development focus. And this is what I speak about, a housing shortage in the next couple of years. And this illustrates it quite well. So you can see this is the zero baseline here. So in terms of single family, we're down about 19% in terms of year over year when it comes to new construction. Condos are dropping, and you can see that total dwellings under construction decreased by 3.5% year over year, 18.6% with single family homes. And with the condos, there have been about a 6% drop. And then the only thing that is in surplus is purpose-built rentals here. And that is going to be a problem. You know, if all that is going to be built over the next couple of years is purpose-built rentals, it's not going to give as many opportunities for those who are going to want to purchase property. In the next couple of years, as the market starts to correct itself, as we get to learn how to live with Donald Trump down south and his never-ending threats, getting some more rate drops at some point. They're not going to be significant, but we will still get some relief in the next couple of years. This is going to cause a problem for us. And as we get into the charts here, Vancouver dwellings under construction, you can see that condos have been dropping off a cliff. There's been a little bit of an uptick, but they're dropping. And the only thing that has been really being built since 2023 are purpose-built rentals. With single family, this is the lowest number we've seen since 2009. So, you know, anyone that can hold some land right now and get land in Vancouver, it's going to continue to increase in price point. It's been interesting to see that there's been such an upgrade in terms of detached inventory, and the pricing isn't really there. Despite single family homes being deconstructed at a high level, there is a lot of opportunity here as well. And then again, the single family dwellings under construction, you can see that, you know, we're starting to get to the lowest levels here that we've seen in quite some time, and we're going to be breaking down into levels that we haven't seen in over 25 years pretty soon. When we get into market implications and, you know, the buyer advantage here, you know, temporary, possibly. I think, you know, we have seen an uptick in terms of buyer activity in the last month. But, you know, there is the rare combination of high inventory, stable prices, and improving affordability creates a strategic buying window, particularly in the single family segment. With the future supply constraints, as we just outlined, declining construction starts and permit approvals signal potential supply constraints in coming years, especially in the single family segment. Single family permits trending downward, construction pipeline shrinking, and long-term supply imbalance is likely. And I've done some videos of this in the past, but we're going to see that housing shortage, especially with, you know, not as many options, as there's been such a focus on purpose-built rentals in the next, you know, 3 to 6 years. Key takeaways and something that you can put in your back pocket moving forward. Short-term buyers market, high inventory levels, stable prices, improving affordability create favorable conditions for buyers, especially in the single family segment. You know, when I say short-term, you know, this is not something for, you know, a week or 2 weeks. You know, this is going to go on for quite some time. But when we look at the charts in terms of pricing in Vancouver, it's not going to last for years and years and years. Price pressure continues. Sales to listings ratio at 34% suggests further price corrections are likely, though the 7% decline from peak has been more moderate than expected. Construction reorientation, the significant decline in single family construction at minus 18.6%, contrasted with the growth in rental development, signals a structural shift in housing supply. So that's what I have for you today. If you want any further explanation of this, book that strategy call with me. You can scan the QR code in the banner or book it in the description below. Happy to discuss this in a further matter to help you with your due diligence. But until the next one, thanks for watching.